Market blues, Indian indices dip on global cues. The Indian stock market witnessed a significant decline on February 20, 2025, mirroring the negative global market sentiment that has been prevalent recently. The benchmark indices, Nifty 50 and BSE Sensex, both closed in the red, reflecting the broader market's struggles. This marked another day of losses in what has been a particularly volatile and unpredictable year for the markets so far. Global economic uncertainties, including potential policy changes in the US and fluctuating commodity prices, have weighed heavily on investor sentiment. The Nifty 50 index edged lower by 0.09%, settling at 22,913.15, a slight but notable drop. The BSE Sensex, on the other hand, witnessed a sharper decline of 0.27%, closing at 75,735.96, indicating more significant losses. Both indices had opened the day on a cautious note, tracking weak global cues and investor apprehensions. The negative sentiment persisted throughout the trading session, with no signs of recovery as the day progressed. The decline in the Indian market was largely attributed to losses in heavyweight stocks, particularly in the banking and automobile sectors. These sectors have been under pressure due to various macroeconomic factors, including rising interest rates and global supply chain disruptions. HDFC Bank emerged as a major drag on the indices, with its shares tumbling by 2.4%. The bank's performance has been closely watched by investors, given its significant weight in the market. This decline in HDFC Bank's stock price can be attributed to profit booking after a recent rally. Investors seem to be locking in gains amid uncertain market conditions. Maruti Suzuki India, the country's largest car maker, also witnessed a significant decline, with its shares falling by 1.8%. The auto sector has been facing headwinds due to semiconductor shortages and fluctuating demand. The decline came after Suzuki Motor Corp, Maruti's parent company, announced a cut in its electric vehicle launch target. This decision has raised eyebrows among industry analysts. This news sparked concerns about the company's growth prospects in the rapidly evolving electric mobility space. Investors are now questioning the company's strategy and its ability to compete in the future. Global economic factors played a significant role in shaping market sentiment. The potential for increased U.S. tariffs on imports, as indicated by former President Donald Trump, has created uncertainty in the global trade environment. Investors are concerned about the impact of such tariffs on corporate earnings and global economic growth. Adding to the concerns, the minutes from the U.S. Federal Reserve's January meeting highlighted persistent inflation worries. The minutes indicated that the Fed might continue raising interest rates to combat inflation, which could impact capital flows to emerging markets like India. Section 4. Gold glitters amidst market volatility. In contrast to the subdued performance of the stock market, gold emerged as a safe haven asset, attracting investors seeking stability amidst uncertainty. The price of 24-karat gold in India witnessed a significant increase. The price of 10 grams of gold rose by 390 rupees, reaching 88,040 rupees. Similarly, the price of 100 grams of gold also surged to 8,80,400 rupees, reflecting a strong demand for the yellow metal. The escalating global trade tensions, coupled with inflation concerns, have boosted gold's appeal as a hedge against economic uncertainty. Section 5. Outlook. PMI and RBI minutes in focus. Looking ahead, market participants will be closely watching key economic data releases for further cues. These data points are crucial as they help investors and analysts gauge the economic trajectory and make informed decisions. The release of Purchasing Managers' Index, PMI data for the manufacturing and services sectors, will provide insights into the health of the Indian economy. This data is particularly important as it reflects business conditions and economic activity. Additionally, the minutes from the Reserve Bank of India's RBI latest monetary policy meeting will be scrutinized for clues on the central bank's stance on interest rates. Investors will be keen to understand the RBI's future policy direction. The market is likely to remain volatile in the near term, influenced by both domestic and global factors. Market participants should brace for potential fluctuations and adjust their strategies accordingly. The direction of the U.S. Federal Reserve's monetary policy, along with developments on the global trade front, will be crucial in shaping market sentiment. These factors will play a significant role in determining the market's future course. Meanwhile, gold is expected to remain in demand as a safe haven asset, with its price trajectory influenced by global economic uncertainties and inflationary pressures. Investors often turn to gold during times of economic instability.